Hello, today we're going to talk about the Consumer Confidence Index, which is compiled by the Conference Board. As we've discussed previously, the Conference Board is an entity out of Michigan, which compiles economic data, but most importantly, they survey consumers, they survey C-suite executives, and they roll them all up into a Consumer Confidence Index, and there's also a CEO Confidence Index that they compile as well. So the Consumer Confidence Index is composed of two things. One is the Present Situation Index, which is not a tricky title. It literally means how do you think things are going for right now. Then they have the Expectations Indexes, what is going to be your view of the future economically, which is defined by them as 3 to 6 months down the road. What I find interesting this month is that it has increased in September for the second consecutive month. Now, those of you that are viewing this are well aware that the Fed has been crystal clear about their intent to raise interest rates. Previously, the Fed has been almost in a cry wolf standpoint. We're going to raise interest rates. We're going to raise interest rates, and they didn't. COVID, they lowered interest rates and put a flood of money into the economy, inflated the price of a lot of assets. And so this is the first time in my career, and I've been doing this for over 30 years, that we are going to be in an increasing mortgage rate environment or an increasing interest rate environment. And that provides headwinds for housing, provide headwinds for cars, anything that you borrow money for, use somebody else's money to purchase for. In theory, as that goes up, consumers' behavior in terms of spending contracts, and their confidence about where they are, their present situation, and their expectations for the future all turn negative. But that was not the case this month. So I was trying to figure out how could that be possible. And here's a quote from Lynn Franco, the Senior Director of Economic Indicators at the Conference Board. She mentions declining gas prices. And I thought, is that really it? Is that the correlation between consumers being more confident and that? Well, it's a 2 month period. Let's look at this United States gas price. This goes all the way back to uh, April of 1993. We're just over $1 a gallon. These valleys are really all recession related, and here's the COVID bottom. I think we get down below. This is in March, $2. Well, I actually did get below $2 in April of 2020. But since that time, it's pretty much been on a straight upward tilt. And then there's the peak is going to come in June 13th of this year at $5.10 a gallon. Since that time, gas prices have been steadily dropping down. So you got June, July, and August. Well, half of June. So you got July and August. Well, that's 2 months. So in the 2 months where gas prices have come down, consumers have gotten confident about their present situation and their future situation. And it really is interesting to see that that's the price of a gas of gallon is the one thing that all consumers feel, unless you're driving an electric car. But it is interesting as you see that on a weekly basis or how often you fill up, and it is very impactful, especially in an area like Raleigh-Durham, where everybody has a car and public transportation is not an option. So there's a lot of driving that goes around. So that happens nationally as well. So as gas prices have come down, consumer confidence has gone up, and their expectations in terms of what the future is going to be has gone up. So we overlay that on top of mortgage interest rates. And this chart goes all the way back to November of 2012, where they're at 2.75% for the 15 and 3.38 for the 30. If you go to COVID year in 2020, you can see that most of the rates were below 3%. And here we are today as of the recording of this, September 26th. The 30-year is at 6.98%. The 15-year is at 6.24%. So rates have almost doubled in a very short period of time. And that's the mortgage rate. But as the Fed rate has increased as well, it's headwinds. It's headwinds for housing. It's headwinds for cars. It's headwinds for anything you want to borrow money for. The last thing I want to talk about is within this environment, they do survey consumers in terms of what they are going to buy. And this is plans to buy within 6 months. And so are you going to buy a car? Are you going to buy a house? Are you going to buy a major appliance? Now, don't necessarily pay attention to how small these numbers are, but pay attention to the trends of these numbers, which I find fascinating. So 10.6% of consumers that they surveyed said they plan to buy a car within 6 months. So you would think that in an increasing interest rate environment, that number would be half, but it's not. And it actually is a little bit better and in line with what you saw towards the end of last year from August to December. So I found that pretty interesting. If you look at who's going to buy a home, 5.3%, that really, it's below where it was in August, but it's above where it was in July. So it's not down in the fours yet, which I think it's going to go down to, but it really peaked here in terms of 7, and 7 was in January of this year, which I thought it was pretty interesting. Consumers were still pretty bullish about buying a house, and then mortgage rates started to increase, and now we're down to this level. So when I look at these three things, it seems like housing has been the most affected in terms of people's plans to buy within 6 months. Major appliances, if you, this is 48.5, which is the second highest during the period presented. So typically people finance major appliances, and I think that's an interesting thing to see, that once again you have an increasing interest rate environment, and yet it really hasn't taken any of the steam off of people's plans to buy an appliance. And now, hey, with a recession supposedly coming, and layoffs come with a recession, the last thing they ask is vacation intended within 6 months. And you can see during this quarter, it's 44% of those that are surveyed are planning to take a vacation, which this is the second highest during that period. So I don't know, maybe a lot of people are whistling through the graveyard, or it's just, to me, fascinating that we've got this almost certain prediction of a recession coming on, and yet consumers are doing a lot of positive things. So I bring this to you so you can ponder it just as I have, and we'll all try and figure out. The good thing is that nobody really knows what's going to happen, but just pay attention to these metrics, because I think they can give us guidance in terms of what's going to happen to the future, and we can make our business decisions based upon that.